Okay, it's Sunday night in Thailand, 9 p.m. on the 5th of August. This time last week I recorded 3 videos for you in which I started off by saying it's likely to be a quiet week with some sideways action and we needed to wait for the dollar to break out. And then I went and got a little bit impatient. I had a lot of new subscribers starting last week and I really wanted to try to help you guys, I suppose, cover your subscription within the first week, which is what most of my subscribers do, but I tried too hard and put it bluntly, I cocked it up. So I need to make amends this week. Unfortunately, of course, the markets are still trading sideways. I've got Bitcoin up here because it's interesting. I don't know if any of you trade it. I obviously do a report on it. It does chart beautifully. It's probably the best market I've ever seen from a technical perspective. Now, we've recently had a little rally over the last month. All the bulls get all excited and everyone thinks they're suddenly going to make an absolute fortune on Bitcoin again. And of course it reversed exactly where it was supposed to at 8,500, 8,600 and it's turned lower. So that was our selling opportunity. Admittedly, it was a few pips below 8,500, but if you did manage to short that when I suggested it, it's been a nice little trade over the last couple of weeks. Now, we're coming to what is crucial support. This support is nowhere as near as strong as this resistance was, but it's still significant. I hope that makes sense to you. So the trend line goes back to middle of January. So it's a long, it's a fairly long-term trend line. 55-day moving average, not as important as the 200-day, sure. And we're holding below the 100-day. We didn't even pause at the 100-day. So I do think this looks negative. But if you're someone who's desperate to get on Bitcoin and you're looking for a reason to buy it, this is where you want to be buying it. Remember when we broke above here and I said this is a buying opportunity, we rocketed. We only went up for 2 days, but we went right to the target. Now we've reversed, come back down to this trend line. So this is key. If you're going to give it a go, 7,000, 6,900, good support. Give it a whirl, but I would have a tight stop because I'd be surprised if we get a decent bounce off there. We're not even that oversold in a bear trend. If we break lower, 500-day moving average around the 6,500 level. As soon as that goes, we're testing these lows. Where do we get to down here? 57 something, 57.74. I don't see that holding. I don't see that as a particularly strong support level. We've got the 59.20 low in February. I just don't think this looks very good. And when you look at that weekly chart, and it doesn't have all those little moving averages and stuff on there, then the weekly chart outlook just looks pretty poor. We're holding below the longer term 61.8% fib as well at 7,600, so it just doesn't look good. Okay, enough on Bitcoin. Dollar index chart, I don't need to spend a lot of time on this, do I? You probably can close your eyes and visualize this in your sleep. I've shown this to you so many times. Long upper wicks on the weekly candles indicate to me that sellers are coming in where they should be coming in at these moving averages here. However, this is a relatively strong candle, even though we didn't manage to break these moving averages, but a surprisingly strong candle actually. I didn't really expect the dollar to bounce so well off what I admit I thought was relatively minor support. This trend line, month and a half old, no big deal, nothing else there indicating to me that there was any strength in that trend line. There's no fibs, moving averages, anything else. But bounce we did. We weren't even that particularly oversold. Anyway, it caught me out. The trend line did hold, and we have bounced. Now, the last candle on Friday, doji, not particularly negative either, but it could indicate that we've topped. This is a really important level. 1, 2, 3 times it's tested it, and each time, we've retreated quite aggressively from there. So sellers clearly are coming in. You can see it on the daily chart. You can see it on the weekly chart. Nothing else matters. 95.50, 95.60, that's the level. If we do sustain a break higher, which I would be surprised, but if we do, then that is a buy signal. And this dollar bull trend, which started in February, looks like it will begin a new leg. And this will have just been a consolidation phase, maybe even a flag, you could call it. So we have to be prepared for that. I don't think it will happen, but I don't try and guess what the market will do. I wait for it to tell me what it's going to do, and then I go with it. Now, it is worth trying a short up here, I think. Worth a short. It's a strong resistance level. So we could turn around. We could still get those sellers coming in, pushing, giving us these long upper wick candles, and then we could retreat down to this lower trend line, which is at 94.35 right now. So 94.30. 94.40, 94.30. We start breaking below there, especially start breaking below 94.15. Which would be the low of this candle. the last swing low, then obviously we can assume that that trend line is broken, and we should head down to 93.80 as the first stop. But I would expect it to continue significantly lower. So sit and wait for the dollar. As soon as we see the break, we go with it. Here we have the Aussie dollar versus the US dollar, and unfortunately a big sideways trend. I mean, crazy really. The market goes up for a day or two and then just reverses. So it's very clearly in a sideways trend. I can't see any sort of inverse head and shoulders. I guess you could call this a double bottom, but we'd have to at least get above 74.50. So that's going to be our first resistance level. That ties in with a trend line on the short-term chart as well. I'm not going to bother to show you that trend line. You don't just take it from me that we've got 74.40, 74.50. If we get through, then we can push up to here, which is a 75.00 area, 75.10. You've got a trend line going back to mid-February, and you've got the Fibonacci resistance. So this is really the more important resistance level. But I certainly would consider 74.40, 74.50 as significant enough if you're a scalper. Worth trying a short there. Be quick to get out, and then look for a short up here at that 7,500 level. A break above here, especially above the 100-day moving average, which will be at around 75.35 by the time we get there, would be a strong buy signal. But until we get that buy signal, I would suggest we're going to either trade sideways to lower. A quick glance at the weekly chart really doesn't give us any indication of what's going to happen either, or which way we're going to break. We've got some long lower wicks on this, but then we've got some dojis, so lots of indecision. No conviction in the market really from either bulls or bears. If I just scrunch this chart up, you can see that, well, we know all about this. We've talked about this before. We've got the 61.8% fib support at 73.25, which is holding, but there's nothing else there. So I don't see that as particularly strong support. But hey, we could turn around and rally. There's no reason why we can't. And obviously, if the dollar index starts to fail on the downside, then that would give us a nice little push higher on this one. New Zealand dollar versus the US dollar has found decent support around the trend line, which goes back to May of last year. So we're talking, just over a year and a couple of months. It's finding support there. Yeah, we've got 61.8% fib support there as well. So it looks okay. There's no reason why we can't turn around and go higher. But again, unfortunately, this market is also trending sideways. So it's not really giving us an opportunity. We didn't get... I meant to say in the Aussie dollar chart, we didn't get to sell the best levels last week. There really wasn't any opportunity in it. And again, in the New Zealand dollar, not the greatest of opportunities either. It's just dicking around and not even really testing the levels that I want it to test. Okay, actually, having said that, 67.15, 67.05 I had as a buy level on Friday, tying in with this longer term trend line. We missed it by 3 pips. I'm guessing you probably didn't get in and managed to catch that bounce, but the bounce wasn't huge anyway. The trend line here goes, yeah, this is the May trend line. So, it does seem to be holding that May trend line, doesn't it? So that's going to be key on the downside. We have these little spikes below it, but we quickly recover from this trend line. But a break below 66.86 would kill that trend line and indicate that the market's going to head significantly lower. This little trend line here, a couple of months old, is around 68.00, 68.10. Once we get up through there, we should test 68.50, 68.60. That's a bigger level to watch, just as it was in the Aussie dollar, not totally dissimilar charts. If we get up through 68.60, 68.70, we've got a really good buy signal, and that would probably coincide with the US dollar breaking to the downside on the index. The dollar yen this is the weekly chart of the dollar yen, and you can see this chart is just a mess, pretty much just sideways. Right, we did reject the 61.8% fib at 113.23 and came lower. I thought we would break lower last week, but the Bank of Japan, I should say, came in just as we were about to break this trend line and pushed the market higher. We got down to 110.76. Bank of Japan then weakened the yen and we spiked up, but then spent the rest of the week coming back down to the trend line. So by Friday, we dipped to 111.07. You can see the trend line holding. It's not the strongest of trend lines. I wouldn't be at all surprised to see us break below 111.00. That would be a little bit of a sell signal, and we'd start heading down towards 110.70, probably 110.50. We'd probably pause there because we'd be getting a little bit oversold. I'm not sure I'd be getting into a long there. But if we do get down as far as 110.00, 109.90, this is a really good support level. By the time we get there, of course, the 100-day moving average will be getting a lot closer to that level. We've got the red 200-day moving average, and we've got the 38.2% Fibonacci support, short term and long term. So that would be a good support level. And as I say, I wouldn't be surprised. You know, if you were selling it, you could take a little bit of profit off around the 110.60, 110.50 level. But if you could hold on to a little bit of a short, half of the position, for example, and maybe run it down to here, that would be a really tasty little trade. We'll see what happens. If we hold the trend line, if we hold above 110.20, 110.10, then yeah, we'll have another go. And I would imagine we'll see 111.80 and maybe even the low 112 area again. That's not a particularly strong resistance level. I'm not really sure why we topped there. So we'll have to watch that on a bounce this week and see if it breaks above it. Weekly chart for the Euro yen. I'm not even going to show you the daily chart because it makes no sense to me at all. If you're trading this, good luck. I have no idea what's going to happen in this. The 200 week moving average is at around 128.80, 128.70. Seems to be holding. It has had a significant impact in the past. You can see it's worked well as support here. It worked well as resistance here back in July or summer of last year, a year ago. That's the only thing of any significance I can see in this chart. So break below 128.50, I assume, would take us down to 126.80, which is a decent looking support area. 126.80, 126.60, which is where you're going to find the 100 week moving average, and you've got a little bit of backup here from the trend line that goes back to April 2017, so getting on for sort of 15-16 month trend line there, whatever it is. Yeah, decent support in that 126.80, 126.30 area if we do break below the 128.70 area. Sorry, 126. Did I say 126? I think I did. So yeah, we could easily drop a couple of points on a break below the 200 week moving average. That's all I've got to say on the pair. If you're trading it, I would just bear that in mind.